Hello, and welcome to Douglas on Trading. Hey, we've got a good one for you today. We're going to be talking about risk-reward ratios. Now, if you don't know what a risk-reward ratio is, or you don't know what your own risk-reward ratio is, then you're probably having a bad time trading. Now, to get what I'm talking about, let's roll down to the risk-reward breakdown. Now, for the purpose of this breakdown, we're going to take a look at 60 trades of one contract. These contracts will be all in, all out, no early exits. We're going to make the math easy. So the first column we're going to look at is a 1 to 2 risk reward. Now, this is a lopsided risk reward. Your risk is bigger than your reward. So in this scenario, your reward is $50 and your risk is $100. Now, if you're just smashing those entries and you've got an 80% success rate, let's take a look at 48 wins would bring you $2,400. Your 12 losses would bring you negative $1,200, and your total would come out to $978. If we drop down to 70% success, your 42 wins bring you $2,100, your 18 losses bring you negative $1,800, and your total is $78. Now, I don't know if this is what you think, but I think 70% success rate is pretty good. And if I rocked out 60 trades at a 70% win rate and only ended up with $78, I would be pretty disappointed because that's hard work right there. So let's go down to a 60% success rate. If you've got 36 wins at $1,800 and 24 losses at negative $2,400, your total is now negative $822. And again, 60%, depending on your strategy, is actually a pretty good win rate when it comes to day trading. But if you've got a lopsided risk reward, you could end up on the wrong side of the money. Let's go over to a 1-to-1 risk reward. Now, in this scenario, your risk is exactly the same as your reward. You've got $100 reward and $100 risk. Now, back at that 80% success rate, 48 wins now brings you $4,800. Your 12 losses is negative $1,200, and your total is $3,378. At the 70% success rate, your 42 wins brings you $4,200, your 18 losses brings you negative $1,800, and your total is $2,178. It's a dramatic difference over the small $78 you would have won on the 1-to-2 risk reward at 70%. If you go down to 60% success, your 36 wins brings you $3,600, your 24 losses brings you negative $2,400, and you're still in the money at $978. So at a 1-to-1 risk reward and a 60% success rate, you're almost up $1,000. Now at a 1-to-2 risk reward at a 60% success rate, you were down nearly $1,000. So let's go to the last number here in this column. We've got a 50% success. At 30 wins, you've got $3,000. At 30 losses, you've got negative $3,000. And your total is negative $222. I know what you're thinking. What the hell is wrong with your math? Well, there's one thing that we forgot to factor in here, and that's commissions. Trading is not free. So in this scenario, we're just assuming a commission fee of $3.70 a round turn. You take that $3.70, you multiply it by 60 trades, and that comes out to that negative $222. That has been factored into all of these final totals. Let's hop over to the 2-to-1 risk reward. So in this scenario, your reward is now twice that of your risk. You're looking at a $100 reward for a $50 risk. Now at an 80% success rate, your 48 wins brings you $4,800. Your 12 losses brings you negative $600, and your total is $3,978. At a 70% success, your 42 wins is $4,200. Your 18 losses is negative $900, and your total is $3,078. Go down to 60%, your 36 wins are $3,600. Your 24 losses is negative $1,200, and your total is $2,178. Very dramatic difference over that 1-to-2 risk reward of negative $822. Go down to the 50% success. Your 30 wins brings you $3,000. Your 30 losses brings you negative 1,500, and your total is now 1,278, so you're still in the money. If you want to lose money on your 2-to-1 risk reward, we've got to drop down to about a 33% success rate. In this scenario, we've got 20 wins at 2,000, 40 losses at negative 2,000, for a total of negative $222. That means with a 2-to-1 risk reward, if you're rocking out something like 38-40% wins, you would probably be decently in the money, or at least somewhat in the money. Now, I don't know about you, but thinking about hitting 40% of my trades is a lot less successful than a 1-to-2 risk reward where I'm trying to hit about 80% for the same payoff. So that's something to think about. But the problem here is you can't just pick a risk reward out of the sky and think it's going to pay you. You can't just grab like a 4-to-1 risk reward and think that that's going to somehow work out just fine. Because naturally, the farther away your reward is, meaning the bigger the reward that you're going for, the harder it is going to be to hit it. And the tighter your risk, or the tighter your stop loss is, of course, the easier it's going to be to hit that stop loss. So naturally, your win percentage is going to probably go down as you go up in your attempts at risk and reward. So that would mean if you're going for a bigger risk reward, you're probably going to want to go for less trades. You're going to want to go for those home run type scenarios where everything is set up perfectly. Otherwise, you're just shooting for the stars. Now, you can try to shoot for the stars, but my guess is you're going to end up blowing up your account. So what do? You really have no idea what risk reward you should take right now if you are unsuccessful as a trader. So you're going to have to do something that most traders do not want to do. The vast majority of traders do not want to do, and that is keep a detailed trade journal. Now, in this trade journal, a couple of really important numbers is you're going to want to know what your average wins are, like how much money you make on your average winning trade and how much money you lose on your average losing trade. And then of course you want to know your win percentage. And one thing you may discover is if you went on a hot streak and you're hitting like 70-80% wins, but you look at that win-loss ratio and your wins are like an average of $100, but your losses are an average of $300, let's say, you might just realize that you just hit a hot streak, and as soon as that hot streak ends, you're in some serious trouble because those losses are way too big to sustain that path. So you need to know your personal statistics, and once you know those, then you can begin working on a strategy that works for you. Or maybe you realize that you need to come up with an entirely new strategy than what you've been doing. Alright guys, if you like this video, please go over, hit the like button, subscribe to this channel. It's the only way these videos will ever be found by anyone else. Otherwise, I'm just a lonely man in the woods speaking to the sky. I don't want to be that man. And if you want to up your game a little bit, if you want to try your hand at live trading, real money trading, but you want to limit your risk dramatically, I suggest checking out Earn to Trade. I think they're a fantastic funding source if you're familiar with companies like Top Step or OneUpTrader. Earn to Trade has a lot to offer. They're kind of the new kids on the block, so give them a chance. Check them out. I think you'll like them. All right, guys. Thank you, and happy trading.